Hello, Andrew Hanlan, a Senior Economist, Westpac. Locally, the main focus has been on a speech by the Reserve Bank Governor Glenn Stevens, who spoke on Tuesday at an ASIC forum. The topic for the forum was the ability of the Australian economy to withstand shocks. Not surprisingly, the tone from the Governor was positive on balance, both in terms of Australia's structural ability to withstand those shocks and also in terms of current conditions. There's certainly no doubt that Australia has shown great resilience in the face of what is a commodity boom bust in terms of prices. The Australian economy has adjusted quite well, as the Reserve Bank Governor has spoken about many times in the past. In terms of current conditions, the Governor's comments were positive, as they should be. We know from the national accounts that the Australian economy grew by 3% in 2015, so that was exceeding expectations. It's above trend. The Reserve Bank Governor suggested that the economy at the turn of the year seemed to be picking up, and that was consistent with other indicators such as business surveys and labour market figures for 2015. He also talked about how business surveys seem to be suggesting that those better conditions have extended into 2016. And on that front, in the coming week, we'll have another business survey, the AIG's PMI, a manufacturing survey. In February, we saw the index increase by 2 points to 53.5. Now, that's the strongest reading since 2010. Of course, the lower currency, some construction projects are providing a boost to the manufacturing sector. More generally, low interest rates, a low currency providing significant boost to jobs, the service sector and building sector across Australia, providing momentum into 2016. Turning to the US, the debate and the focus is really about the debate on the Fed and in terms of the labour market. What we have seen in recent days is some comments by Fed officials, some of them non-voting, like Bullard, suggesting that the Fed should consider a rate hike in April. We lean towards a hike more in June. The market at this stage is just pricing one hike. We think that's probably a little bit behind the game. We're leaning towards 2 hikes, as is the Fed. In terms of this week ahead, the key focus will be on payrolls. Jobs growth has been very strong in the United States. What we saw in the previous update was payrolls increased by 240,000. We're looking for another robust gain of around 200,000, and that should certainly be sufficient to hold unemployment at 4.9%. And the risks, we think, are that unemployment will move lower to around 4.8% in the next 1 or 2 months. Very much keeping alive the debate around an April rate hike, and certainly suggesting that market pricing is underestimating the expectations of rate hikes by the Fed this year. Thank you.